to quiz and say, oh, which one do you think is the most bullish? Which one do you think is the most bearish? Well, I'm going to just read through these and kind of explain them briefly. Number one is probably the most bullish, right? It opened at the dead low. There's no tail at the bottom of it. So it opened at the dead low, closed at the dead high. Very, very strong candle out there. Number two, while you look at this one, you go, oh, well, it's red, so it's got to be actually kind of bearish, right? No, it's actually rather bullish because remember, just like the example we just looked at, even though the body is red, right, on number two, meaning it closed lower than where it opened, it still closed at the high end of its range. And if I asked you who had the last word in that battle, it was the buyers, because it was, at one point, an all-red candle all the way down to this low. But for some reason, those buyers pushed it back up, meaning the momentum was there at the end, therefore rather positive. Number three is it's pretty bullish, right? It's similar to number one, but it has topping and bottoming tails. A tail is this little part here, means it went down to that price at some point and it reached this high price at some point. So you'll call those tails or wicks or shadows depending on who's instructing or using the candlesticks. Number four is actually rather bearish. Even though it's a green candle, psychologically we go, oh, green, positive, good. Well, not necessarily. Again, this is like what we looked at a couple slides ago, where you have a lot of selling pressure coming in at the end, pushing it down to near the lows of the session, therefore it's bearish. Now number five and number six, I would say, are almost the same. They represent indecision, very small real bodies, right? You can see number five's got that small red body. Even though it's red, it still didn't have much of a change from where it opened to where it closed. Same thing with number six. That's called a doji, where it opens and closes at the same price. The only thing that separates 5 and 6 is the range. So we had a lot more volatility during that number 5, whereas number 6 was almost non-existent, barely even moved. And those can also give us clues as to potential market direction. So let's talk about that number 6 for a second. That's the doji out there. What is a doji? Well, a doji is simply a candle that opens and closes at just about the same price. It doesn't have to be exact, but a lot of people, they're true technicians, say it's got to be the same price. Well, when you're trading something like the S&P and it's trading at 2,000 plus, it's kind of hard to get it to close exactly the same as where it opened. So we like to say ballpark, pretty close. And you notice that we have 3 different representations of it out there. You see one is just like a little tiny plus sign. You have the middle one there, which got some big ranges to it. And then you have the one on the far right, which is called a dragonfly doji. And I'll explain some of the differences between those as we progress. So let's go into some of the more popular doji patterns. And again, if you have any questions, feel free to send those in here and I'll go over them. Gravestone doji is one of the more popular ones. Now, a gravestone doji is simply something that opens and closes at about the same price. That's the classic definition of a doji. Now, for it to be a gravestone doji, it opens and closes at the low, or very, very near the low, and has a long topping tail. Now, by itself, this really doesn't help us make a trade. Location, location, location. You'll hear that heard all through real estate. You hear it with Japanese candlesticks as well. If this candle was at the top of a nice sharp uptrend, then it's going to give me a good probability that prices are going to be moving to the downside. So if this is a gravestone doji, which denotes selling pressure and maybe a more bearish environment going forward, well, what does the opposite look like? Well, here we have a dragonfly doji, which looks exactly the same, just upside down. You have prices open and closing just about equal. That's right near the high. And you have that long bottoming tail there. Now, again, location is key. If we had this happen at the top of an uptrend, it's really not that important to us. If it's at the bottom of a downtrend, and especially if we go back to Online Trading Academy's core strategy and talk about it into a demand zone, now we really have something that gives us some teeth to work with to a potential upside move. Now, what are some of the other ones out there? These are all called spinning tops, and really all a spinning top is a very short compressed range. A narrow range candle is what they like to call them, or NRCs. Generally what that means is you have a lack of emotion. So it stays in a very short trading range. You don't have much price movement, maybe some small wicks or shadows, tails above and below, but really it's not a lot going on, and it generally represents indecision. Now, indecision can frequently be found in areas of consolidation. So I've got an illustration here, and you'll see in that red oval there, there's a lot of little tiny spinning tops. And it's really where price was just going sideways. Again, it doesn't matter what security this is. You'll find spinning tops a lot in sideways congestion, but you can also find them at points where price is accelerated aggressively and all of a sudden it just kind of stops. Those become great trading opportunities for me as well, because that indecision could lead to buyers or sellers' remorse, if you will, and we could see a reversal in price direction. So those are your spinning tops. Of course, we've got the tiny little narrow ranges. We also have these big, colossal, giant ones. These are, it just says long candle. I just think the name is terrible out there. I like to call them expanded range candles, really large ranges, meaning we've moved a lot in whatever time period this is, whether it's a 1 minute, 5 minute, daily, weekly, monthly, doesn't matter, but a really large candle. Now, obviously, that represents a large price move, a wide range. You generally don't have wicks with these, meaning it's going to be closing near the highs, opening near the lows, closing near the highs, and vice versa. What this represents is a lot of emotion. A lot of times you see these expanded range candles or long candles after major announcements, right? Could be an earnings announcement, could be some press release coming out, but there's a lot of emotion there, and generally it's coupled with a lot of volume. That's what's driving the price. So we can see on this chart, here's a couple examples of them. You see some really large expanded range candles. Now, again, it doesn't have to close at the dead low or open at the dead high, but it makes it more powerful if it does. And these 4 examples that I have here, you'll see that all of them have some topping and bottoming tails. So nothing with candlesticks is going to be perfect. It's a little bit of an artistic flair there, meaning it's kind of slightly subject to your artistic view on this one. And I'll show you some examples of what I mean by artistic view here shortly. All right, so now let's go to some of the more popular ones. Here we have the bullish harami, which in Japanese means pregnant. And you can see by the illustration on the right-hand side, you've got price drifting down. You've got a nice big black or red candle. And then the next candle is going to be most likely green. It's preferably going to be an up candle, but it doesn't have to be. But it is going to fit within the previous range. So as you guys can see here on the screen, you've got this black candle, and this entire candle, including the tails, should fit within the real body of the previous candle. That is really the definition of a bullish harami. So you've got the downtrend. The first candle is definitely a down expanded range candle. The second candle, maybe a little narrower range one, preferably to the upside, and it is completely engulfed by the first day there. So we can make a little modifications. And this is where I think Japanese candlesticks get rather humorous, because you have the bullish harami, and then you have, oh, the bullish harami cross. Well, what changed? You'll notice all that changed was the second day. Instead of it having a body, now it's just a cross, it's a doji. So it doesn't make it any more powerful or less powerful, but I wanted to include that here so you guys can hear. You may have heard some of these terms out there, the bullish harami cross or just the bullish harami. So how does this look on a price chart? Well, we can see very clearly here we've got 2 decent examples. Now, I know if some of you are masters of Steve Nissen's book on Japanese candlesticks, which of course is kind of the Bible for most people out there that like to look at Japanese candlesticks, you'll say, well, that first one on the left side isn't exactly a harami. Why not? Well, if you notice, I'm going to have the cursor illustrated over here on the left-hand side. You'll see we've got this, you can call that expanded range candle, this black candle right here, and then we have this little doji. It's basically a bullish harami cross. But technically, you'll notice that the tail on the doji is just slightly outside of the highs of that expanded range candle.